And let's talk about the freight markets with Zach Strickland right now. What do we have on the reefer market?
Reefer market. So reefer rejection rates coming down, but reefer demand also with it. So reefer tender volumes here in the green falling faster than the reefer rejection rates themselves in terms of overall rate, indicating that demand is easing in the contracted reefer side. But the fact is that it's still extremely tight at over a third of the loads versus 1 out of every 2 loads. Contracts basically meaningless in the reefer market at this point.
It really is, and it kind of shows that maybe we're getting out of the full swing of produce season.
Not so fast, my friend.
Okay.
Yeah, let's go ahead and hit our spot market chart up real quick, and then we're going to see spot rates still extremely active right now. We've still got a very high rate. We've got our fuel index here just to show you that don't take this all the way, take this as a face value right now, but there's still fuel pressure on it. 40% increase versus November 1st last year. That is included in these spot rates. A lot of those all-in rates that you see has this in it. That's going to have a huge impact. So this curve is actually not as, up as it looks at this point. It's actually a little bit more flat. And then you have these dips. These are crazy dips in this. This is the volatility in the reefer market right now, out of control.
It is out of control. If we were just comparing line haul rates, it'd probably be a little bit down, mirroring O-Tri or Row-Tri.
Yeah, it'd be closer to it for sure. Let's go ahead and look at the map real quick. Get a sense of where reefer capacity is tightest in the United States. No shock out west, still extremely tight. The upper Midwest, we've got some pockets. Of course, Indianapolis market, a lot of cold storage there, kind of a throughput for some of those the reefer warehouses up there. Northeast, still, everywhere's tight, but the tightest area is definitely out west. We got Twin Falls. Let's go ahead and look at a chart of Ontario real quick. And we've got Ontario and Fresno reefer rejection rates, both showing some signs of easing coming into July, but still extremely tight. 41.1% in Southern California. It doesn't even.
I know, right? How do you cover that?
It's easing.
If you're a freight broker, how do you cover those loads?
You almost can't.
If you're a shipper, how do you cover those loads?
Yeah. That's why that spot market rate is so high.
It is.
Because we talk about easing, and things did get, what's crazy to me is that we still haven't recovered in the reefer market back to where we were in February. And again, seasonally speaking, this is not what you would expect in the summer, but at the same time, the market just hasn't come back, hardly at all. We get a little bit here in Fresno, but it's, the market itself just super tight right now. Let's look at our produce rates real quick to show you that the produce season is actually still extremely.
Which is which?
We've got our ag rates for Los Angeles to Atlanta in orange, 93.50, as reported by the USDA. We've got our ag rates for Fresno to Philadelphia here in green, so the longest length of haul, and heading up into the Northeast. Of course, you're going to expect that one to be the highest. And then, of course, San Francisco to Chicago, 85.50, all showing almost a flat line since the beginning of May.
And San Francisco is kind of a proxy for the valley, right?
Yes, so where they grow all the garlic and the lettuce and everything like that, and I can't think of the name.
San Joaquin.
Or it starts with an S.
San Joaquin?
San Joaquin's up there, but I'm thinking about the one that grows the lettuce specifically.
I don't know that one. But thank you so much for the update.